Welcome to Illuminati Silver. We tell you the truth about silver. Today is Friday, the 12th of October 2018, and we're giving our view as to what is likely to happen after this week's stock market turmoil and rise in gold and silver prices. And is it time to jump stocks and start to rapidly accumulate gold and silver? Well, first of all, let's review what has actually happened so far this week. Gold began the week at $1,202 and almost immediately fell to $1,183 by Tuesday. This is UK time. We saw a small blip up to $1,194 on Wednesday, and then Thursday we witnessed a substantial leap to $1,225. Similarly, silver started the week at $1,463, fell to $1,426, and then on Thursday spiked to $1,472. So why did this happen? Well, of course, it hasn't gone amiss that we have encountered two major days of stock market sell-offs. For the past couple of weeks in particular, we have warned subscribers to just be aware of what has been happening in emerging markets and China in particular. Now let's put something to bed here first. Problems with emerging markets have been with us for many years. A simple Google search will show you on page 2 and 3 that concerns about these were regularly voiced as early as 2001 and again in 2005. So when you hear people say, "We knew it was going to happen," and claim to be some forecasting guru, to be frank, you could have said this at any time during the past 18 years or more. There will always be a problem with emerging markets. After all, it's like rearing a child while it is young. It makes mistakes, costs lots of money, and causes its parents and those around them grief. The hope and desire is that they develop into handsome, mature, and generous adults. Good luck with that one. What became increasingly apparent to us during the past 3 years is the increasing level of debt and dollar borrowing these economies were taking on in order to grow. We're sure you have noticed that we have produced a few videos on China and emerging markets and hopefully positioned you, our listeners, to keep a careful eye on them and their neighbours. Our attention became further heightened when the Fed actually began to raise interest rates, and later when President Trump began to moot and then adopt his international trade policy on tariffs and sanctions. All of which would land these economies in a worse situation and run the risk of debt default and collapse of their currencies due to rapidly rising inflation and loss of confidence. Please remember, we have always argued that perhaps the major determinant of a currency value and any other investment is confidence. Anything that improves it will cause the price to rise, and anything that undermines it will cause it to fall. Which is why we reissued the Armageddon video that we produced 2 or so years ago. Be careful, or one may get what one wishes for, we concluded. There is some method, after all, in our madness. Well, at least we hope so. Right, back to stock markets. Well, the Dow fell 545 points yesterday, and after a fall on Wednesday of over 800 points. The Nasdaq closed yesterday at 7329, down 460 points since Friday's close. Oil stocks, both Brent and WTI, are down $4 and $3. Also since Friday, though they have recovered slightly from their lows. So the key question we all have to ask ourselves is whether this is just a temporary correction, or does this mark a change of direction? And are we going to see that stock market collapse the pumpers and doom merchants have been quoting all along? Well, our view is really quite a simple one. Stock markets were most certainly getting ahead of themselves, and frankly, a correction was necessary. Otherwise, a more substantial bubble burst could in fact occur. The fear has been the Fed's determination to follow a very hawkish monetary tightening situation and promising to become even tighter. We even had the president commenting that the Fed was undermining his policies to get the economy roaring ahead, and said he wouldn't sack Jerome Powell, but was very concerned about their interest rate policy. He accused them of, quote, having gone crazy, unquote. Now, we're producing this video prior to the Wall Street opening, and without the benefit of seeing this week's COT report, which we shall update you on during our weekly roundup tomorrow. But it is our belief that the markets will regain some composure and both gold and silver prices will rein back a little. Having said that, there are some aspects operating in their favour. CPI figures came in yesterday at 0.1% for September, compared with 0.2% forecast. Therefore, it appears that inflation is not a problem for the moment. This could influence the Fed to be a little less aggressive with interest rates, and we should see this reflect in a slight stock market recovery. So our overall contention is that no, we're not at the edge of the precipice, and there is no need to jump. However, we do have some uncertainty ahead, and with the US citizens about to go to the polls in a few weeks' time, there will still be further uncertainty and market turmoil. Frankly, if these interim elections were not taking place, we would say this is a false dawn, and gold and silver prices will give back their recent rise. However, this small shock will cause traders to be a little more cautious and anticipate possible bad news in November. We shall be much more confident once we've taken a look at the COT report, and next week's will be even more revealing, thereby telling us exactly what the speculators are up to. So for now, our best estimation is that silver may indeed hover between 1425 to 1480 for a few more days, and gold around the 1210 to 1225 level until the markets have digested the news and decided upon a sustainable direction. We shall update you further tomorrow in our weekly roundup, when we will have received the benefits of additional data, plus central bank governors' comments, plus the Consumer Confidence Index reports, all of which will add to the overall picture. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on Twitter. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we're not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.